Hey folks, it's Adrian CryptoBirb speaking. Welcome to today's Friday webinar. Lots been going on. I've just actually come back from a short little bit of a vacation after an amazing, successful free trading congress that brought so many opportunities to so many great people. And congratulations to everybody who participated. Once again, Bitcoin is right now at the very resistance, at a very twist and turnaround points, and many stocks actually show that there is a potential for a further twist to the downside. We're going to investigate this and more throughout today's show. If you're ready to stay tuned, well, we'll get there right in a minute. Welcome back on the stream. I'm really happy and I'm really excited because I'm pumped like crazy. Literally, I didn't have for a very long time a chance to rest and stretch my bones for a little bit, which I did, and this actually just pays me off already because of my huge excitement to get back to the markets, get back to the office. I love this layout. I love this office, and it's pretty cool. Let me know, everybody, if you can hear me and see me fine. This is very important, so that you let me know, so that we talk and communicate. So drop me a comment if you can hear me and see me fine wherever you're looking at it right now. If it's on YouTube, if it's on Twitter, Twitch, or anywhere else, just keep me posted. If you have any questions throughout the show, well, especially if it regards Bitcoin resistance, we're going to tackle them down either throughout the show or off the show. Hope all is well with you guys, and let's get the thing rolling. And actually, before we do, I want to congratulate all my Croatian friends on the winning match to Brazil. This is pretty intense. I had a glance at the penalties. It's pretty sick and dense. Congratulations, guys. Onwards and upwards. Let's rock it. Let's rock. What are we looking at, to be honest, here? Well, a little bit of a potential for decline for stocks, right? We know for sure that stocks had a decent rally, and this rally probably bottomed out of the bear market, right? You can tell that there has been this significant shift in the direction and trajectory of the 200-day curve, this red moving average, which shows you the long-term trend, the primary narrative and dominant tendency for the market to go up if it is ascending 200-day MA, confirming the bull market, or conversely, declining 200-day MA. And we can tell that it's not the case anymore because the curve has flattened. And this means that we have most likely escaped the bear market as it is on the stock side. It means also that most likely, or more likely than not, unless again interrupted by some extraordinary situations that we cannot influence, right? We don't know what's going to happen on the Russia-Ukraine war side. We don't know if it's going to expand, right? And anytime it can expand and infect other countries, it may also mean that there's going to be a rapid and an unpredictable shift in the markets, because market react based on the future expectations of the future, what the future holds, right? The prices, the trends are driven by the expectations and anticipations of what traders are pricing in for the future to be. It's not showing the actual current state of the market. It's rather showing you what traders are expecting and are anticipating about the next days and weeks. And knowing of that, again, we most likely have bottomed out already on the bear market, right? And unless, again, those extraordinary exogenous signals come in, a technical analysis of this chart tells me that, again, this 200-day trend has slowed down the decrease and moved into the stable phase, moved into this neutral trajectory, which means probably a longer term, kind of like a sideways period. But other than this, it's a positive sign much more than not, because it tells me that the dominant tendency has shifted from the decline that it had stayed for the entirety of 2022 to date, and actually just has freshly shifted. This is promising. We also have this bullish crossover in the 20-day trend over 200-day trend. So short-term bulls are in control, and about to cross the medium-term bulls also, right? So we've already marked this bullish crossover to the upside again on the 20-day trend. The short-term tendency and the medium-term tendency looks as if it's about to actually cross over to the upside and confirm that most likely we have bottomed out on stocks in October, which is quite a typical bottoming pattern and month for stocks, which is interesting. Dow Jones Industrial, that's what it tells us. However, we cannot be 100% sure as in it's going to rally like there's no tomorrow, because right now we're looking at a temporary local weakness over the past couple of days or weeks, because we are looking at this deterioration or the bearish divergence, if you will, the very violation of Dow theory. The Dow, one of the very basic theorems of Dow theory tells you that the averages must confirm each other. The averages, as in Dow Jones Industrials, which is Indu as it is on the upper side of the chart, should confirm directionally what's going on the transportational average, which is listed down below. And it's not the case. You can tell that there is a clear divergence, clear the disparity, clear deviation of the directions, higher highs and lower highs. Higher highs on the Dow Jones Industrials and lower highs on the Dow Jones Transportation. And last time it happened, I mean, maybe not last time it happened. Every time it happens, this poses a significant risk and danger and puts this prior lasting trend in danger, at risk of a twist, basically, right? So pretty strong retracement, or I should say pullback recovery from the October lows. Makes sense, of course. This has been the dominant narrative, for stocks overall. However, this local disparity of the directions, this local deviation tells me again that the transportation node is lagging behind the Dow Jones Industrials, which again violates the very basic principle of trend stability in light of the Dow theory. So it means that there is a further risk, enhanced risks, higher risks of a local twist and turnaround. Okay, it doesn't mean that it's back into the bear market, unless it of course collapses heavily below the 200-day trend support, right? But it does look as if it's about to roll over to the downside, potentially to form this some sort of like a breakout retest sequence, right? So we definitely have seen this major massive break to the upside, but we don't typically kind of like move in a straight line forever. So what happens is you have those highs, the sequences of highs and lows, and if this is an ascending trend, then those are going to ascend subsequently, right? So we are talking about a sequence of higher highs and higher lows, which tend to again form certain critical support and resistance levels. And otherwise, this often comes, like I said, in this form on the sequence of a breakout followed by a retest, right? And if it's supposed to put in a higher low rather than deviate lower, then this is what confirms further and strengthens the bullish narrative, if you will. So again, the fact that we bottomed out most likely in October for stocks is much more bullish than not, right? However, we are still moving in this somewhat, somewhat territory of a danger, right? So in case it again breaks and fails heavily to hold this 32,500s, let's say, support for the 200-day trend for the Dow Jones Industrials, I would argue that this may take us a bit lower, right? And this is the situation that the bulls don't really want to see, because it confirms the local weakness and inability to stay above the long trend. So ideal situation tells you that the bulls are staying over the long-term support, and if they do not give in so easily, and that we may ramp up and actually just move higher beyond. But until that happens, again, there is a risk of a local turnaround, of local twist, potentially not only to retest that 32,500, right, as signaled by the potential reversal on the Dow Jones Transportation average, which is trending down right now. Again, this would potentially put much better odds of continuing lower, right? So expect, in my opinion, it looks as if it's about to roll over to the support, potentially give us a little bit of a hint of just flirt around the support. And how strong the support is, we're going to see. The chart is going to tell us the full story, and we're going to only know this in the hindsight. But this is the ideal technical analysis scenario. I hope it makes sense. Please let me know, guys, if it makes sense, if it's clear to you. And I want to welcome some of you. There's salute from Double R. Hi to you. Hey man, long gone. Hope all is well with you. See you around, my good bud. Congratulations on your great participation through the Congress. I definitely recognize your participation there. Hassan is saying definitely we're in the bear market and bottom. Only 29 viewers. That's actually interesting. 29 viewers. It shows on only on well, I'm not sure which platform on Twitter it shows over 100 right now, and this is this is not showing the collective numbers. Those typically pop up on YouTube eventually. But that's the truth. That's the harsh reality. I remember exactly last year, each and every single YouTube video we would put out would gain like 50, 150,000 views. So it's far different. But this also tells a lot about not only the optimism or the pessimism rather of the investors, but more so it tells you that those people who still hang around and those who still persist and refuse to give up, just like you guys, just like Hassan, Siran, Longo, and on Double R, you guys are having much better chances of making it well in the next bull run, right? So congratulations to you. I want to be very front open about that. Very well done. So if we are, like I said, to point it out, right, then we're looking at this deterioration, this divergence, which poses this local temporary threat. However, short-term divergence doesn't imply long-term implications. Short-term pattern, short-term signal is short-term implications. So it doesn't interfere this long-term pattern of the potential reversal, right? So the dominant trend has likely shifted from the downside to the sideways. It may again flirt around a little bit longer. We do know that there is going to be likely um, somewhat of a slower opening towards 2023, right? Typically, the January and February are rather bearish, much more bearish than bullish. This is what we at least can tell on the 125 years of the seasonal patterns history, right? This is January and February, and typically we would see a little bit of a declining tendency on the seasonal basis, right? So even though January tends to yield a little bit positive of the returns on average returns by month over the past 125 years, this is not kind of like just some random data. This is 125 years of sample. This is really significant. Followed by typically bearish February. Okay, so I wouldn't expect much from quarter one, especially that, like I said, we are looking at the deepening inverted yield curve, right? The situation on the economic side definitely tells me that there is a lot of bearishness and the pessimism in terms of the expectations of the investors, as they feel uncertain about the next 6 to 9 months, about the economy being in falling deep into the recession, right? The interest rate curve, or the interest rate spread, if you will, sorry, cutting below the zero tells you that there is bigger demand, or there is actually there is this, typically the actual yield curve works that the longer maturities actually have better yields, right? Because you kind of like keep your capital for longer, so it pays you off better. However, if the investors don't feel safe about the industry, they would definitely kind of like invert this demand model, right? So you tend to see those inverted yield curve telling you that the disparity again between the 10-year treasury notes and the two-year just paper bills, that the deeper the interest rate spread becomes, the more in trouble the investors expect the economy to be in the next 6 to 9 months, right? This is a leading indicator within the macro financial framework. So this tells me again that not only it had been historically very good indicator and a trigger to economic recession, just like you see it every time we actually invaded this territory below the neutral zero threshold. We actually invaded. We were invited to the recession many times in the past. So it has a pretty successful winning hit rate in the history of predicting and leading into the recession. So I wouldn't not only be surprised by that, but we also get this as an additional confirmation, because the previous requirement for two negative GDP growth over the quarter two and quarter three this year, had been already met. So this kind of like strengthens the thesis that the investors on the self-fulfilling prophecy as well expect the economy to collapse into 2023, right? In the next 6 to 9 months, that's what it says. So that's why I'm pricing in a little bit of a slower quarter one and quarter two overall in the 2023, followed by potentially stronger 2023 finishing lines, right? So this is what it reads. This is what it shows, for the market. Overall, other than this, we are looking at Bond prices, which are continuing to grow fatter, right? This is definitely positive and aligned with the stock strength overall. However, this is bonds have been taking hits across the board, for a long period of time ever since the market topped in November last year, right? We're looking at the TNX, which is the 10-year U.S. Treasury yield index, actually showing this medium-term downtrend, right? As it's not only kind of like slipped below the 20-day trend, this green curve, but it also kind of like again dipped below the medium-term trend, which is slowly reversing, while the 200-day trend ascends. So it tells me that again, short-term trend is down, medium-term trend is about to reverse, and the long-term trend is upwards. This tells me this is potentially what we're looking at a medium term, again, not dominant, but medium term wave tied to the downside on the yields expectations, at least given by the traders. However, know that we have the FOMC meet coming up, and most likely, despite there's been a little bit of less hawkish, not even dovish, but less hawkish response from the FOMC committee, I would argue that we may still look at a very reasonable expectations for the interest rate hikes. We can actually just revisit that, and we're going to have a look at the CME countdown to FOMC, right, which is going to tell us exactly the story. It's in 4 days, 23 hours, and 37 minutes as it reads. And by the way that we are looking at it, the traders are pricing in the actual 50 or are pricing in with 77% of certainty, the target rate for 425 and 450, okay, the way it actually looks right now. So this is not something that should be ignored, because 4 days ahead of the actual event, you're looking at a very dominant tendency and opinion coming from the traders pricing in the actual target rate for 425 to 450, okay. So this is the target fund rate. We're going to see about that, right? But this is telling me that it's definitely not too much of a slowdown, potentially just a little bit of a less aggressive approach to rate hike and monetary tightening. However, we are not out of the woods just yet, right? This is something to be definitely considered. Hope it makes sense to you guys. So this, of course, confirms the long-term trajectory on the interest rate overall policy, interrupted by a local decline and local again expectations easing on the investor side, the way it looks. Other than this, well, crypto is definitely down slightly. However, the percentages are not big, right? So we're talking 0.5% or 0.96% on the downside. On the negative side, XRP minus 183%. So there is not much of a very clear, I should say, interruption on the crypto node. However, it's definitely not looking too healthy. Dollar is actually, again, collapsing for the first time in a very long time. Below the 200-day trend. This is something extraordinary definitely this year, because this reverses the overall dominant tendency that the dollar had been held within for the 2022 today basically. But the short-term trend is down, the medium-term trend is down, 200-day trend is up. However, it's being kind of like tested and teased right now. This tells me that the investors are pricing in weaker dollar right now down its 200-day average. This tells me potentially gives a little bit of a more bullish room or less bearish territory for the stocks and for the risk assets. This is potentially promising. Hope it makes sense. I would definitely love to hear from you guys if you have any questions. So keep them coming. Definitely, if you're watching that on YouTube, don't forget to leave the likes and questions. If you have any, hit the subscribe button and hit the notification bells also, that you stay notified at any time we roll in live. And there is plenty of the live streams, so you can definitely catch up many of those as long as you actually press the notification button on your subscription to our YouTube. This is free, and lots of free alpha hopefully to be shared in the next days and weeks. So get ready and get prepared. And as we go, because this definitely lines up this overall industry and I should say connections, relationships for how it's going to interfere Bitcoin, right? So what we're looking at right now in terms of Bitcoin, well, this tells me that we are looking at, first of all, not only declining trend on a 200-day basis, right? So the bear market on the Bitcoin side never stopped. It never came off, right? The stocks, like I said, the stocks are already flattening out, right? You can tell that this right end of the curve is flattening out, is going flat. Well, Bitcoin is definitely going down in terms of the 200-day average, right? This tells me that the dominant trend on Bitcoin is right now definitely bearish still. The stocks probably have escaped already the bear market spiral, while Bitcoin has definitely, differentiated negatively because of the FTX collapse, right? Which definitely lighted a lot of bearish salt and a lot of expectations, a lot of pessimism, as many people lost so much money on this. This is insane, and it's and it's amazing, and it's amazing because, I mean, it amazes me how unfair the political system it is, because it apparently defends Sam Bankman, right? This is terrible. He's really avoiding any sort of like a punishment. So that's strange, and it sucks because lots of people got hurt on that, and I'm really sorry to hear about that. So yeah, Bitcoin is trading below the main support right now. It's definitely not bullish on its own, right? It's proving unable to break out, which is right there at its main resistance. Like I said, we're looking at the main resistance level for Bitcoin somewhere between 17,200 and 300s and 17,500s. Right, this is the main resistance level that I'm talking about in the title for this video, for this webinar, because 17,500 is the main critical threshold that, if broken to the upside, potentially may actually just get enough of a fuel in the tank to get it rolling higher towards meeting the $21,000 resistance, right? And there are a couple of reasons for it. First of all, because failed patterns, if there is a break of failure, right, we're looking at this broken down structure right now, broken down trend, and so far it's refusing to break up, right? But as long as it kind of like, again, just holds below 17,500, it's important technically because it traps all the traders who hold any sort of like short or pessimistic positions. It holds them with no risk. However, if we break above 17,500, is going to prove not only that technically there is a little bit of a promising, ray of hope, if you will, right? That the traders might actually price in something better potentially for the next days or so for Bitcoin. But it also is going to prove all those people who got shorted, who shorted or sold off, the 7,500 breakdown. It will keep them underwater. It means that their shorts are going to be unprofitable, and they're going to have to close them by buying back higher on the contracts, right? So this additionally brings these chances of a potential so-called short squeeze, when there is a lot of unprofitable shorts being covered, additionally pushing the prices higher. So we not only have the technical breakout and invalidation to the upside, but it also brings the potential for something that we know as a short squeeze. If there is a big aggregation of a short side to the market, right, of the sellers, and there is a lot of overall big pessimism, then it may happen that those short sellers eventually short the bottom, right? We don't know definitely if it's going to be the bottom. Like I said, the definite bear market is continuing. It's rolling on. It's not stopping just yet for Bitcoin. So I would be very cautious with predicting any some sort of like a bottom. And miners are still producing and then mining under the water, right? So if we go to the actual chart of the miners, what it's going to tell us is that the average, or actually they're not underwater right now. So the mining difficulty has decreased sharply, right? Because last time I checked, it was $21,000 for the mining average cost for Bitcoin production. It was at $21,000 a couple of days ago. Right now it's 16,500, while the average price of Bitcoin is 1,750, right? So it tells me that, again, this being higher than the upper one tells me that the miners are actually right now slightly over the water, or they are not underwater. So this is something positive, right? Just maybe because, again, a lot of miners had already capitulated, right? Remember, why it matters is because miners operating below the level of their break even basically agreed to run the business on the loss, right of the loss. And the question is, how long can you operate your business on the losing side, right? And it may happen that you're getting insolvent. It may happen that you have to cover for all your losses, close down your business, and cover for your expenses, right, before you go bankrupt. And this means that there is, and anytime Bitcoin goes, the price of Bitcoin goes below the production cost of Bitcoin, it means that it puts the danger of the miners capitulation sell-off, right? So if that happens, and there is a level on Bitcoin chart, right? Let's say, imagine it's again, like I said, this Bitcoin goes down below 16,500s, right? And this puts again a lot of miners under the pressure, under selling pressure, right? Because they're underwater again, they're unprofitable, which means that eventually will have to sell off their holdings, right? And sell off the Bitcoin, which may happen that it's going to take the prices lower, potentially below the lowest point on the chart right now this year to date, right? 15,500. And if that happens, the stop losses may get triggered that are placed under there, of course, right? And there is going to become this some sort of like a death spiral, this deadly cascade of sell-offs where miners break the support, and this triggers the stop losses, which sells the positions even lower, dragging the price lower, which forces the miners to capitulate even more and sell off even more and even lower, which pushes the prices even lower in the chart, right? And this kind of like, again, just brings this vertical accelerated downside move. So this is the worst case scenario, right? But as long as miners are kind of like just right there above the surface of profitability, I would argue that it's more bullish than not, or it's actually not bearish on its own. So it's better to see that after I came back from a vacation, the miners are back above water, if you will, above this break-even threshold. So that's good, but it's still the question of Bitcoin becoming and remaining under the main resistance of 17,500. So as long as it's actually, again, like I said, just not broken, this definitely proves the bearish case much more than not. And this aligns with the bearish tendency, which hasn't been inverted just yet. So tells me that those underperforming assets will continue to underperform relatively, right, on the relative strength. So we can tell that this also is directly showed in this very strong and aggressive negative correlation coefficient for Bitcoin, right? And as long as it is this way, when the stocks move up, Bitcoin on average should go down. This is the main narrative for the past couple of weeks. Now, this isn't anything kind of like obvious, or this isn't anything common. This is, in fact, very uncommon. Only 3 occurrences and a very, very slight cases when compared to the current one had happened this year so far. And well, historically, we are back at the levels when Bitcoin was in 2019, right? When the negative correlation coefficient is so strong that it tends to move again against the stocks in terms of the direction. So stocks are strong moving up, like I said, short-term slowdown, but the bear market is most likely stopped already. So probably a little bit of a chop outside, but as long as the Bitcoin correlation coefficient stays negative and is strongly negative on such a polarity, and just that it proves right now versus S&P 500, then whenever stocks kind of like go down, it may mean the inverse move for Bitcoin. So potentially it brings a little bit of a promise for Bitcoin there, right? But there is definitely no guarantee in that. Seasonality wise, we are looking at a potential strong close of the year, more often than not, right? So just maybe we're going to have a little bit of a Christmas rally. Who knows? Bitcoin loves to reverse in December historically again. So who knows? Just maybe we're looking at the finishing touches and the last chances of catching Bitcoin low, right? But as long as there is this this very, very kind of like dangerous place and spot for miners, right? I would say that we should be ready just in case, like, again, hope for the best, be ready for the worst, because if you know that the miners trade unprofitably, then they may have to sell off at one point. And if that happens, this death spiral of cascade sell-offs may trigger some sell-offs deeper and more aggressive on some exchanges, taking the prices lower to, let's say, $10,000 or $14,000. Who knows? The technical breakdown for this pattern is at $12,000. Or even lower at 10,500, right? So 2 patterns up here close, and encapsulated targets for those. The price breakout objectives are somewhere between $10,000 and $12,000. So who knows? Maybe self-fulfilling prophecy takes us down. But my main definition that I want to, guys, just kind of like promote to you is that that you should be ready for the worst. That's it. Hope for the best, be ready for the worst. That's the main narrative, I think makes sense, especially in this market when the Bitcoin is dominantly moving downside to the downside, and it's not looking at any sort of like promising reversal marks just yet, at least when compared to stocks. And we know that by the momentum principle, the underperforming assets are likely to continue to underperform, and Bitcoin has been extremely underperforming against the stocks. So stocks are where the capital is going to drive in more likely than Bitcoin. So it would actually be needing a lot of luck for Bitcoin to reverse anytime soon. It doesn't mean it's improbable or it's impossible, but it means it needs much more luck, and it's much less likely. That's what I mean. So all that being said, guys, again, you know, the things are not looking overall too good for 2023 half one. There's a little bit of a slowdown, potentially slower quarter one, stronger quarter two, which eventually is going to kind of like put itself, annihilate itself and put the market overall in the equilibrium mode in terms of the returns. Bitcoin is definitely lagging, right? So it's not helping. It's moving in the downwards trajectory. It's not broken out of its own bear market just yet. So it's holding on to its previous descending, declining trend. It's not promising, and there's a lot of risk. There's a lot of headwinds for Bitcoin in terms of the mining being miners just being right there. There's been, like I said, the sharp decline in the mining difficulty because there most likely had been a lot of capitulation from the miners already, which again just freed up this space in the miner scene in the network, right? Which actually pays off better production costs and earnings for the miners locally. So we'll see about that, right? Cautious optimism is what I would argue for the stocks, and it seems that realistic pessimism is for what Bitcoin is likely going to hold on and represent for the next days. But overall, be ready for the worst, hope for the best. So let's hope for the best that historically Christmas rallies are ahead. We'll see what it brings. Hope you enjoyed this one. If you have some questions, guys, I'd love to answer them. There's one coming from Double R. I wonder, no blow off top at the end of the bull run, maybe no huge dump at the bottom. So great job on asking the question. I think this is a great question. I don't think there is such a direct solution. Our brains love to search for the simplest solutions. However, reality is often more complex. And the fact that there was no some sort of like a blow off top, a classical print book, textbook pattern on the peak in November, which I was definitely surprised by. This does not translate into no spikeish bottom, on Bitcoin. This I wish it worked like that, but the market is not like this simple puzzle that kind of like you click on one point here and another one opens kind of like here, and there's only this one straight line that connects those two solutions, right? So it may happen that again we didn't have this blow off top pattern in November last year, but we're going to have even deeper, cut through hole and complete capitulation this year, even stronger, right? Who knows what's going to happen? We don't have a crystal ball. I do think there is no guarantees in this market. So I hope you guys hope for the best and stay safe and get ready for the worst, because that's exactly what you think would work best for you. Last question. What do you think about ETH in the short term? So Ethereum, let me open up the chart real quick for you. Let me check it. Okay. So what I can see is, first of all, that this is the same chart, right? Ethereum versus dollar and Bitcoin versus dollar. You can tell that Ethereum is way closer to its 200-day mean. So it means it's technically stronger than Bitcoin is, right? This is the first thing in striking difference that I can tell and notice, right? Only if you manage it and to measure it percentage-wise, only about, again, 10, 12, maybe 15% on the Ethereum to its 200-day proximity distance, about 22% just to catch up with the 200-day average price. And this is the long-term resistance. This is the long-term fair price of Bitcoin based on the technical analysis, while the fair price of Ethereum is 14,500 or 1,500, right? So Ethereum is way closer, is technically stronger than Bitcoin right now. So again, this strength tends to be maintained because trends tend to persist. So I would argue that Ethereum is looking better in the short term than Bitcoin is. However, it doesn't mean it's going to it cannot reverse at any time, right? It cannot revert at any time. It's definitely at the resistance here locally. There's been a lot of catching whipsaws, on top. So beware. But overall, if I were to guess and make my bets, I would go as a trend follower with something that is stronger, and Ethereum is stronger, right? So it definitely has less earning potential, but it also has less risk. So the question is if you're in it for the risk or for more protection. I'm potentially for more protection, right? So I would go for less risk and more strength and more trend stability, more trend presence. But if somebody is more of a mean reverted, more of a momentum trader, and more of a risk taker, then Bitcoin is offering better edge, but it's less promising, or it's less likely, right? So this is the way I would frame it and respond that. Thanks so much. Thanks so much for all the kind questions and your participation. Congratulations to you guys once again. You are looking by looking at this very webinar, you are giving yourself a better chance and a better edge, better opportunity among any other traders. Trading in theory is a zero-sum game, right? Unless you are invited to be joined by the governments, which can print money endlessly, right? So this kind of like violates the zero-sum game theory. But other than this, we know that the markets are typically zero-sum game, which means that for you to win, there needs to be somebody else who loses on the bet. So you have to outsmart the rest of the market, and you can outsmart them by learning and giving yourself the right tools and the technical toolkit that I'm trying to teach you here for free. Hope you guys enjoyed this very webinar. Stay safe, and if you enjoy that, again, make sure you hit the subscribe button, smash the notification, likes as well. Drop some of your questions, and well, don't forget, guys, that under my pinned tweet there is a free PDF that you can gain access to on one of the links. Through links just somewhere in the comments. So feel free to go ahead and dig for them, just like here, and you're going to catch them. How to turn absolute worst investment mistakes into profitable trading strategy in under 30 days. This is a limited guide. You can get it for free. All right, optionally, you can just go to thebirbnews.com, scroll down a little bit, and there's going to be this page for the PDF. And just put in your email name, your name, and I'm going to send a copy to you for free. Hope it helps. God bless you all. See you around, and have a great weekend. Let's rock.